Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.
And now, ladies and gentlemen, it's time for our first panel discussion titled Tech-Driven Innovation Fostering Credit Inclusion. In a world driven by digital transformation, the panel discussion promises to unravel the intricate tapestry of technology and its pivotal role in shaping the future of lending. How can innovation be harnessed to extend the reach of credit, ensuring inclusion for all? Well, steering us through this thought-provoking exploration is CNBC TV-18's Latha Venkatesh once again. Along with her, let's warmly welcome our panelists. Put your hands together for Shri Ashwini Kumar Tewari, Managing Director, Risk Compliance, State Bank of India. Mr. Sandeep Batra, Managing Director and Head of Wealth and Personal Banking, HSBC, India. Shalini, Warrier, Executive Director, Federal Bank. Ratan Kesh, Executive Director and CEO, Bandhan Bank. And Ajay, Rajan, Country Head Digital and Transaction Banking, Yes Bank. Over to you, Latha.
Thank you very much. We have a very elite panel over here, actually comprising the entire gamut of sizes and shades and nuances of the banking sector. We have Mr. Ashwini Tewari, of course, who represents probably 1/3 of the banking sector, the Managing Director of State Bank of India. Shalini, of course, represents the private sector bank, but one of the largest private sector banks, federal, perhaps third or fourth. So clearly represents a large segment here today. The foreign banking sector is represented by Sandeep Batra here from HSBC, from Bandhan Bank. Ratan. We have Ratan from Bandhan Bank, and that represents a large MFI sector. And Ajay of Yes Bank represents, again, the private banking sector. So a fairly well-represented panel over here. We are primarily discussing inclusion over here. So let me start with Mr. Tewari on that note. Mr. Tewari, do you think that there has been a quantum leap in terms of lending? We have financial inclusion in terms of opening of bank accounts, which the government championed. But what has been the scale of growth in terms of giving credit?
Yeah, I think you've raised a very, very important point. The financial inclusion journey in our country has been synonymous with the growth of the Jan Dhan accounts, and these are essentially saving accounts. So while there was an element of overdraft linked to that, 20,000 and then another 30,000, so totaling 50,000, but that didn't take off too much. There is some penetration there, but what is more important is that these accounts, as they had some balances, they were zero balance, but as they grew in balances, they became eligible for a lot of other lending services. And later on, the Mudra scheme, which was launched, etc. All of these things have now enabled a significant pickup in those kind of accounts. So, for example, in our case only, we have seen about 25 lakh odd accounts opened in the lending space alongside the Jan Dhan accounts, which is a significant number for us across the personal segment and MSMEs, because some of these are lower MSME micro segment as they are called. So in my view, this really, the lending thing has taken off now, and the entire summit today on digital, I think while we have all kinds of protections to be built around the FinTech lending, but this is also a kind of inclusion which, in my view, many people who are not able to get loans from banks perhaps, and from NBFCs because of the lower ticket size and lack of documents, have been able to get. So in that sense, this also has caused inclusion.
Well, in terms of numbers, what I've given to understand by CIBIL is that the total number of unique loan accounts, and remember, this is not total outstanding. This is only outstanding at a given point in time. So obviously more people would have taken loans than the numbers I'm giving you. From 2017 to 2019, the numbers rose from 91 million loan accounts to 179 million loan accounts, and represented 12% of the population to 22% of the population. That's 21. Chances are that there has been a significant growth. I've got some extra numbers from CIBIL on 2023, and the numbers indicate that there has been a 14% jump from 21 to 23. So we are probably talking about, the 12% of population becoming something like 30% of the population. That's the extent of financial inclusion that's been achieved in the last 5 years.
I'll just add that many of these could be repeat loans to the same microfinance borrowers. So the number might be a little lower than the 25% we think, but still, considering from 12% to 20% plus in just about 4 or 5 years is massive.
Okay. Now that is really reading my mind, because the last word from Sibyl is that MFI, I will be a little careful because there are repeat customers. So, okay, even then there is a doubling of the credit culture, which is significantly important. Shalini, there are various, pillars through which inclusion has happened. How good has been the credit through UPI, which I guess is RuPay cards? Has that made significant contributions to lending?
So thanks, Latha.
We can hear you. Just keep it close.
Yeah, thanks, Latha, for that. And pleasure to be here. I think credit on UPI is still very nascent, Latha. It's still, few months old. A few banks obviously have launched it, Federal, ourselves, HDFC, etc. I think it will take a little more time for us to get it. There are two aspects of it. One is credit card as an instrument to use UPI. That is really an existing credit card customer getting one more avenue to pay. So will it expand the credit market? Not likely. What it's likely to do is convert some of your normal debit card transactions or your savings account transactions to credit card. It will not expand credit. But the other one, which is credit line on UPI, which all of us are working on with NPCI, will definitely expand the reach of credit. So if we were to have this summit, say, 6 months later, I'm sure all of us can sit together and see how much of it we have been able to kind of leverage that infra to grow the credit and inclusion. The fundamental issue, however, I see, Latha, is how do you assess the credit, right? That is the real core problem that all of us face. And there, I think credit on UPI can help us because we can use a lot of the analytics that we do currently and superimpose it on savings account behavior, superimpose it on cash on delivery behavior to see how that is being enabled to get more understanding of the individual concern before I say I'm confident to give him a 1 lakh limit, for example. So that's where the biggest benefit is going to come from, but I think it'll take another 6 to 12 months before we can sit on a panel like this and say how it's exploded the financial inclusion market.
But it can be a quantum leap, you think?
Yes, it can be definitely a quantum leap. It's clearly something that's going to be enabled by all banks first and foremost. And given the propensity for using UPI, given how UPI has proliferated the payments market, it can only help a financial inclusion. So it will clearly think. But just give it a little time. Yeah.
Okay. Can I toss that to Bandhan? Since you would normally have, a larger number of MFI customers and who are increasingly coming into the UPI net, I would assume the incremental numbers of people who are using UPI would come from, tier 2, tier 3 cities, because tier 1, I assume, is already converted. They may already have been on Paytm and now on UPI or GPay or PhonePe. What is your expectation? Do you think credit on UPI is going to be a game changer? Has some work already started?
Yeah, so thanks, Latha, and thanks CNBC Lentra for getting us in this conference. So quickly, before I get into the specific question, there are a couple of points. I think as a country, the financial inclusion has broadly been solved with PMJDY and a whole bunch of things. It's not about financial inclusion anymore. I think it's more about financial empowerment. The whole microfinance industry is 3.5 lakh crore. And you realize that roughly around 20 to 25% people have access to credit. There is huge opportunity and lot more to be done by collectively between banks, MFI industry, FinTech partners and entire ecosystem. We can do a lot more in that area. The formal templates of credit evaluation for the large corp or the large banks does not fit into this model. We got to have a lot more surrogates, lot more tech-driven and human interface to be able to do it a lot better. So the identity layer has been solved with digital public infrastructure. That's got solved now. But you still need bureau score, which is there, I think, getting matured over a period of time for this segment of borrowers. Then you don't have those surrogates. Like you still have to go physically with a tab and do household income assessment? Do I have what Shalini was talking about? Do I have the other data points? Because they are now into digital payments, they are using heavily with 10 billion UPI transactions happening, they are using it. How do I use that as a most surrogate to be able to provide access to the credit to this segment of customer? Those simple jerry makers, the leather goods producer and all of them. I think that's the key, which is, I think a lot more work needs to be done.
Are you getting increasing digital footprint of that category of people?
Clearly it's happening. You are seeing that because they are coming using the digital payment system more and more, they have the identity layer solved. We are seeing some more data points for us to take few calls beyond the bureau score or beyond the obvious sort of household income assessment. But that's where technology can really help us make it a lot smarter. I don't think today there are enough and more technology who are willing to sit with me and really design processes and technology to cater to the segment. I think it's a lot more work to be done, and some of the partners who are sitting here, we are actually working with them to create those solutions.
Okay. A similar question to you, Ajay, but yours is the other end of the spectrum. You all more began as a tier 1 metro bank. How have your co-lending exercise helped you penetrate? Has it meant more financial inclusion? And has it meant more secure lending because you are probably able to get more digital footprint?
Sorry, you mean core lending or co-lending?
Co-lending.
Co.
Yes,
CO.
CO, yeah. What did you think it was?
No, I said core lending.
No. CO lending, co-lending.
Yeah.
What I mean is your partnership with FinTechs, basically.
Yeah. So on the partnership part, I think, one bank which you have associated, for the longest time, probably with partnerships, would have been Yes Bank, but predominantly was on the payment side, and which is where, we built our leadership. Today, 1 out of 3 digital payments would go through the bank. What we have extended that partnership is actually now towards lending, obviously with an eye towards financial inclusion, not necessarily, down the curve to start with, because right now co-lending as a model itself is quite nascent in the industry. So the way we are working with fintech partners, and actually more foremost was actually to look at our own lending platforms and reshape our own lending platforms. The original platforms which we had were not attuned for lending, and definitely not for digital lending, right? It was a more traditional base of lending which it was used for. So first and foremost, the platform itself was more made attuned to algorithm-based lending or cash flow-based lending, looking at surrogate information to do assessment, etc. And then of course what was easier to do was actually to extend our partnership with fintechs from payments towards lending. And that is something which as a bank we have been very consciously looking at, while of course we are not very aggressively pursuing it, but we are being selective in terms of the partners that we choose with, the segments that we go towards, and looking at proliferation on that. The other thing which we also did was, and the ED sir, ED RBI referred to it, which is the frictionless credit platform. So we also work very closely with the Reserve Bank Innovation Hub, who has created this frictionless credit platform, which is aimed at democratizing or standardizing surrogate information for usage for all banks. Now you will find that various banks are at various phases of digitization, and that is really where RBI and the regulator itself have been very pragmatic towards getting all the banks at the same getting all the banks the same amount of data, and allow them to use those data points for increasing lending, especially in these segments where it is required, right? So if you look at agri-based loans, KCC, MSME loans, consumer loans, so these are areas where the more level of digitization is happening, and which will be used by all the banks across the board.
Okay.
So if I can,
Sandeep,
sorry,
from a
Latha, can I
foreign
comment on
bank's
that? Can I quickly comment on that? I'm sorry, but I just thought I should add to what Ajay very rightly said. If you look at the challenge on lending, there are two kind of main segments where I think we see a challenge. One is the MSME side, which I'm sure we'll explore a little later in the conversation. But there is another set of customers for whom, if you were putting it on a 2x2 matrix, these are a set of customers who are probably not financially as privileged as what you would see in a tier 1 city, and also probably digitally not as savvy as you would see in a tier 1 city. So if you put it on a 2x2 matrix, that is a sizable population in India. They haven't really evolved from a digital perspective. They may do a couple of payments, they may do it, but they're not really completely familiar with it. That segment of customers needs a very different approach from a lending perspective, needs to be approached with an assisted model rather than a self-service model to get them onto that journey where they can later be and
GSTN would give you some preliminary digital
on the
footprint.
MSME side, GST would, but if you look at individuals, GST is not likely. So I'll just give you one example of thing, and I think it was referred to by, I think it was DV who referred to it with HDFC Bank, but we also do the same thing with dairy farmers in Gujarat, which is a very sizable population. And the digital bovine loan that we do with them is based on one, it's an assisted model. So I'm sitting next to the farmer and helping the farmer through the process. Completely digital, but assisted. So it's Aadhaar authenticated, it's PAN, or whatever, all that stuff. But the underwriting is done very differently. The underwriting is done based on data we take from Gujarat Cooperative Milk Marketing Federation, Amul, which is on their pouring history. So you have the last 6 months of milk that they have actually given to their cooperative society, which then goes up the chain. And we use that to arrive at, okay, this customer is good for 90,000 rupees, which is the value of a cattle. So he said, okay, you go onto the marketplace and choose your cattle. You're pre-approved for 90,000. So we've done that over the last 6 months. And it's brought in, a very different dimension of financial inclusion. It's also got a gender perspective because most of these dairy farmers happen to be women. And therefore, it's bringing in that element also. So finding those solutions which are bespoke, which are kind of literally personalized and have to be done is where part of the challenge is.
No, I take your point. In fact, I was going to bring that in when we discuss ONDC, which will give, hopefully, a similar, Amul is one of those niche areas where a huge homework was already done. And that perhaps will be done by ONDC. We do not know. A word from you, Sandeep, on, for a foreign bank, which has always worked on niche areas which are already digitally evolved, is there any further inclusion that technology brings to you? Or is it more deepening and better understanding of the clientele?
Well, it's all of that. So when you talk about us as a foreign bank, remind everybody we've been around 170 years in India, from getting India's first ATM.
No, it's just that you are restricted in branches.
No, of course. To be a part of NPCI from the starting moment. So I think clearly HSBC has been around and partnering in India's growth as we kind of go further. So clearly, whether it's partnering with FinTechs, whether it's use of information, whether it's bringing ONDC in a box, we were the first bank to bring ONDC in a box to MSMEs to be able to participate in ONDC. So I think this will be about both deepening as well as understanding new segments and being really a part of that growth. I think we talk about the economy getting to 5 trillion or 7 trillion, and I think access to formal credit will be a very important part as the country grows further.
But you'll have been able to increase the concentric circle of your inclusion because of recent developments, data available from FinTech?
A lot more, because clearly the cost to serve, the ability to access, the ability to partner, all of this has come phenomenally together. So it's a wonderful moment where you don't necessarily need to be the neighborhood branch to be able to bank the client.
Mr. Tewari, now to come to you. There have been recent developments in the form of, say, account aggregators. What status is it? Has it helped increase the amount of data available for either new to credit customers or even existing customers? What stage is it, or is it still work in progress?
Yes, so the amount of data available for sure has increased because CIBIL has only borrower data, but this also gives us the insurance data, the deposit data, which is not available in CIBIL.
And apparently GST and data.
Yeah, so a lot more data is available. In that sense, the overall underwriting becomes much better because CIBIL clearly is driven by whether you have taken a loan earlier and how many inquiries, etc., and various models. So in that sense, yes, this has really turned out well. What is a little bit of a work in progress is two things. One is that the traditional banks like us, for us, though we are now building models around it and we are thinking that how can we have better customers new to bank, even our own customers whose deposits with other banks is not known to us perhaps. So that knowing our customers better and new customers better is something we are trying to do. But otherwise, for us, it seems like that it's a bit of a challenge that any NBFC can get this data for our customers, offer a product which the customer may or may not understand. I mean, the point about assisted modes is, I think, very, very important. And what we are also seeing is that many of the reasons for which customers have given consent and the actual usage for that data ultimately, that's not very clear. Whether there is a one-to-one correlation.
I can add to that. There were bankers who complained to us that the aggregators are normally asking us data about accounts where the balance is less than 25 or 30,000. So this doesn't look like they are asking for a big loan. This is probably fintechs using it to give loans. So do you think the account aggregator needs some guardrails to be put in?
Yeah, I was coming to that. So, as for example, the majority of the reasons for asking the data when we see that, because that's the only thing we see, is personal finance management. And then it is used for any and every purpose, ultimately. So, as you rightly said, that no player in the entire ecospace of finance should be unregulated. And this is one player which is currently unregulated. There is a so-called self-regulatory organization concept here, which is, in my view, not working properly. So, unless it is regulated as to what data is supposed to pass through, they're not supposed to see that. Are they actually not seeing it? Or is it something which is happening which customers are not very clear as to what kind of consent is being given? How do they get protected? What kind of offers they are getting? Are those offers right? We don't have any visibility on any of that. So I think there is a need for a proper regulation here, a proper oversight here, because without which every other player in that chain is regulated except for this. Yes. So why not this?
Okay. Ratan, would you want to add to this? Have you all been faced with multiple questions from account aggregators? Do you have any reservations or a desire for more rules on account aggregation?
Yeah, look, I mean, data is absolutely abundant and people are using it. So consumer finance as a subject, not just the banks, the NBFCs, but even the payment aggregators, even Ola is actually offering BNPL. Yeah. So essentially you have got everyone offering you consumer finance. Fintechs are helping. And it's good for the country, but at the same time, you see the whole commentary around regulatory commentary, etc., are also talking about that. 52 lakh crore is not a small sum of money. Is going through this segment, 41 by the banks and another 11 through the NBFCs. So clearly, you have data and you just take an exposure. That's the easiest thing to do. But then what next is the question. Therefore, for an individual also, sometimes I may fall into the lure of having easier access than necessary, and that can result into an accident. I think it's important that you have some guardrails around it. It's good to have democratizing data in the country, which is very, very important for us to coexist, both banks and the fintech partners. I think it will be helpful if we had some guardrails, both for individual security as well as for overall economy.
I think very strong arguments have been made. Yeah.
Just to add, I think to some extent the analogy would be with credit, like credit bureaus were a few years back.
Yeah, this is an evolved credit bureau.
You know, it started a little bit hazy, people not being sure what the bureau is going to do, etc. And today, I mean, all of us and everybody in the audience knows the bureau very well. There are guardrails around it, as Mr. Tewari and Ratan were saying. Account aggregator has to go through that pain, to get a thing. But clearly, with good customer consent, with the overlay of DPDP and etc., I think there is a wealth of information there which banks can use. It's really up to us to use it responsibly and correctly.
Also, I think while there is a use case in lending, there is a unique use case in personal financial management as well, because clients now have a single view to all their bank accounts, their funds, even the broking. I think our clients' ability to get better advice, able to keep tab of all their money at one place is going to be phenomenal. So the use cases are just beginning to come into the country, and the rails have been laid out. So the use cases will be across lending and personal finance management, and I think you will see lots of partnerships between banks and fintechs to get this together.
Okay, yeah, so a lot of partnership as well, but at some points in time, it can be a bit of a tug of war, depending on how much data is being sought and from whom.
It's also credit mitigant, right? So one is the opportunity part of it, I think, which we all understand. We all spoke about it, right? That you are getting a single view, of the customer's entire persona. You're able to identify what kind of loans, what kind of financial products, or to what extent of financial products you can give. So that is one part of it, which is the revenue generation. But it also helps you design the early warning signals, right? You're actually having access to the account statement. You're actually seeing if the person is delaying any repayments. You can also create those early warning signs to see how you can ring fence, some of the lending or other opportunities which have been done. So it actually plays both ways. It's too nascent again, account aggregators right now. I think it's banks only giving information. The extracting is very less. But as the behavior changes, the volumes go up, I think it will really be a game changer in my view. The way account aggregation.
When it came, we all thought it was game changing. I mean, I remember having a lot of discussions on television, thinking that a huge.
We just need to be a little more patient, I think.
But later on, we have seen that even rules have to evolve. Would you say at the moment on account aggregators? Mr. Tewari, the other big product which astounded the financial sector was this 59-minute loan that the government started, and there is also, I think, 59-minute online PSB
entity is called online
platform.
That's the company.
How is that evolving, or is that also work in progress?
No, so that is essentially an in-principle loan. The disbursement doesn't happen online straight away. The documentation part, etc., still has to be done.
But has it improved inclusion?
No, it has improved inclusion in the sense that a lot of people who actually went online and got the sanction, etc., then subsequently visited the branches and they got disbursement. It did. See, we are a country with, I would argue that we are a 34 nation countries, agglomeration of that. We need thousands of solutions. No one solution is going to be good for us. Of course, the base level has to be things like Aadhaar and all, which essentially gives an identity to everyone. So this one also, the PSB online, now the efforts are on to marry it with the NSCL digital documentation, which is a work in progress. Once that happens, it will be online end-to-end. And once that happens, I think many of these mudra and all, which banks are also doing online, by the way, end-to-end, will all start to happen there. And in the middle of this, you heard the RBI saying the end-to-end, what they have created. So we are coming to a situation where there will be at least 4 or 5 platforms in the public domain, which will all claim to have end-to-end digital and all integrated with all the GST, etc., all the data which is available. So which is a good thing in my view, because these are all, in a sense, BCP for each other. So I take it that way also. There will be multiple platforms, could be a confusion, but at the same time, there are so many people, some need assistance, some don't, and we are just one cyber incident away from one platform. So one doesn't work, the others are working. So in that sense, it's all good.
Okay. Well, actually, this was going to be the last 3 rounds that I want to ask from you all. How do you see the digital platform evolving? But an added question that I want with it is, what is your ask from fintechs? Since you have a captive fintech audience over here, could you add that before I hand it over to Shalini?
Yeah, so clearly fintechs are very important partners. We have seen solutions, and we are already integrated with many fintechs on many journeys as part of our account opening and loans.
You're free to accuse them also.
No, I'm not accusing anybody. So it's all a process of evolution. So they've all taken one piece of the journey and really addressed that very well, not only UI, UX, but also the ease of journey. So we are open to partnership with all the fintechs. The only ask we have is 2 things. One is be really good on the cyber side, because we cannot have a situation, especially after DPDP, that data privacy and cyber security will be compromised. And we have our in-house tests as well, so please be strong on that. And the second, of course, is have strength in the after-sales service, because we have seen very small teams develop something very well, but when a bank like us deals with somebody, and if we have a problem, we want a response in seconds and not days or something. So those are the 2 asks.
Okay, Shalini, your vision in terms of how you think, where do you see a quantum leap, and a word to the fintechs, either ways, what you want from them or what you want to thank them for?
Okay, thanks. I'll quickly cover both of them, Latha. On the first part, I think the quantum leap has to come, in my view, from the whole MSME segment. I think individuals, we've evolved a lot on a scale of 1 to 10, probably at about 7 or 8. But on MSMEs, there's still a lot more work to be done. The online PSP that we refer to, all banks use it in some form and fashion, including us. And as Mr. Tewari rightly explained, you can get an in-principle acceptance. MSMEs can walk into our branches and, with just the data being pulled out from GST and IT, all of that, you can get an in-principle approval. How do you take it to the next stage? Disbursement, collateralization of the security. Where can we get the necessary APIs to do that? How do you get to, just doing the whole documentation from a disbursement? That's where the next level of innovation has to come from, in my view. The digital documentation has evolved quite a lot, so that's helped a lot. But the whole MSME segment and how do we address their credit needs in a more digital manner is where we believe the next, kind of leapfrog of technology has to come in. On the FinTech side, Latha, I think you're familiar. We work extensively with FinTechs. We do a lot of work with them. Clearly, we see a huge benefit in that collaboration, whether it's the customer experience, whether it's innovation, whether it's customer journeys, all of that stuff, the agility, all of that. And it does put some amount of reverse pressure on me and my team to make sure we do it. What I really ask for, and this is something that any of the fintechs you speak to who work with Federal Bank will tell you, clearly, supplementing again what Mr. Tewari said, an absolute understanding on the risk rails, whether it's credit risk, operational risk, regulatory risk, whichever risk you look at it, it has to be something the founder and the team have to understand very clearly. And the second is transparency in customer communication. I mean, there is nothing more sustainable than making sure there's transparency in customer communication. So I think those are the two, which to a very large extent, 4 years back, situation would have been different. But today, I think fintechs understand it and appreciate it and work with banks on that.
Yeah, one can understand there are new frameworks coming for loan aggregators also. So clearly, not too much transparency or in communication to customer is in place. Okay, let me change the question a bit now. The FinTech repository, how do you see that, helping you or helping the financial inclusion ecosystem?
No, I think this is obviously voluntary and people want to register, but it is a great opportunity for firms to be credible, for firms to be registered, for firms to be able to relate to banks. And I think as banks, we are in a business of trust. So you are looking for reliable counterparties because ultimately you are there in the long run. And I think we have some of the best and brightest of India in the fintech industry.
But do you think that that's a huge leg up, a huge platform for fintechs? How do you see the concept itself of a fintech repository?
Again, it is an opportunity, but still early stages. We need to see how volunteering happens and how people. But I would imagine that the industry started to mature. But we are still in early stages of the fintech revolution of sorts. But Shalini spoke about the need for risk and compliance, and I think this will go a long way.
Okay. Ratan, Kesh, I wanted to ask you, have you lately seen an increase in the number of, you can't call it hacking, but customers getting caught in the wrong foot because of being approached, by a whole variety of tech, I can't call them fintech. There have been complaints that some bankers have told me have come from people who are offering to help on, passports. And then it actually leads to hacking of the bank account. Or, other kinds of way in which customers have taken for a ride. So what would your worries be in terms of financial inclusion through technology, but the risks it brings with it?
Yeah, I think it's a very important point that you make, Latha. Clearly, the number of frauds in the country is going up significantly. The banking frauds are escalating. And it is happening partly because of the point that Mr. Kumar said that, look, there is no guardrails around access of data and providing access of data. Oftentimes, it is used for good purpose, but then customers don't realize which one is used for good and which one is not so good. And therefore, they end up falling into the lure or even fall into the prey of some pressure, tactics, etc. by the fraudster. And they are actually few cycles ahead of the banks and the fintech players. So I think one of the asks that I have from the fintech community is to really create enough enabling environment for us to protect customers' money and really hard-earned money. That's one area. I think since you asked this thing, what's the ask from the fintech, I'll also talk a little bit more on the MSME side. I think if you give me
absolutely,
one more
please.
minute. So look, it's very interesting dichotomy that the SME sector, MSME contributes to 29% of the GDP, and the credit gap is something like 15 lakh crores. And you sit in the meeting rooms, the reviews of the business guys, they don't have business growth. They are saying that where do I see the growth? I don't see it coming. Now that probably is because we are not necessarily solving the problems of the MSMEs. What they need, what are their problems? Their problems are that you are asking for a standard credit model of collateral. They don't have. They have that one house, you say that put it on mortgage, they cannot do that. You are asking, saying that, can you show me your last year ITR on the balance sheet, which has really been growing significantly? He has got a good product, good technology, but he's not able to grow because he doesn't have marketing capability. He needs money to be able to build that. He may have a good product, but there are some operational inefficiencies, the margins are not so good. He needs to invest in technology to be able to get that. How do you really bring in the not so formal credit models to be able to bridge into that, the gap? And then both in the review meetings as well as the MSME will get the benefit. And I will go a little bit of thing. Most banks actually go into, we take 2 steps forward and 1 step backwards. I mean, one accident happened and you go back to say, no, that's the right model, and let's not do all of that. Let's go back to our traditional model. It's like 2003, India Saurav Ganguly took batting first and lost the final. And therefore, 2023, Pat Cummins should have taken the batting. He didn't, right? He still won. So you have to have the ability to really think on the spot and do things a little differently. That's my view.
Actually, that's very brilliantly put. It is where the political homework has been done, like in Amul's case, where, the community is ready for marketing because somebody else has done that homework. So it's easy to give credit. But as you point out, that kind of, say, political, sociological homework or cooperation has not been done in so many sectors in India. And a banker can't do that. It has to come perhaps from the social sector. Ajay, your thoughts in terms of what you would want from the financial sector? And let me start another conversation, which I will end with Mr. Tewari, on, how do you educate? Because this digital privacy would mean that so much of the data is going to be available, but you have to tell, seek the permission hereafter from the customer himself. So how do you see that evolving?
So on the digital, the DPDP you're referring to, right? So see, customer consent is obviously, going to be very critical. First, let me address the point on, the ask. So India...
Ask to fintechs.
Yeah, so the ask from fintech. So India, in my view, is it is really at the cusp of digital transformation. We've seen various public digital infrastructure, being created by the government, which effectively, has led to 2 things. One, digital proliferation at scale. Because it comes with the highest level of trust being promoted by the government, enabling regulations, by the regulators, so that it, gives the consumer, whether it is an individual or a business, the highest level of trust that they can actually adopt it, right? And the numbers speak for itself, whether we, and, you started with the point around on credit proliferation, right? The credit bureau coverage itself has actually doubled over the last 3 years if you actually look at it. So that itself shows how much, credit has actually included, not only in terms of existing credit, but also new to credit, right?
New to credit, or at least the amount of credit coverage has gone from 12% to about 25% from 2017 to 23. Do you see from 23 to 30 a similar doubling?
I would definitely see that. So 400 million is, 380 million is actually the number, that I read about. And I definitely see that the number doubling will not take as much time as it did in the past, right? So with the slew of initiatives like, the frictionless credit platform or the account aggregator, initiatives like Open, all of these are actually meant to standardize or democratize in a way, information and also credit protocols across the sector, right? So whether it is a bank using it or an NBFC using it or a fintech acting as a LSP, facilitating banks to proliferate credit inclusion, in my view, the next doubling will actually take far lesser time than what has happened, in the past, right? But I think the most important part, which the regulator has also alluded to and, come out with regulations around risk weight and also, some warning signs around usage of algorithms, etc. I think that could slow it down a little bit, while it will not definitely stop. but what it will make sure is that it will consolidate the players in terms of the ones who are arbitraging information to one who are using it in a more, careful or a calibrated manner, right? So they're really putting onus on the regulated entities to calibrate their own risk engines or rule engines and then take the credit. Of course, they can use surrogate information, but finally the call needs to be taken by the regulatory entity. So I think that will make sure that credit is being done in a more prudent and scalable manner.
Fair point. Actually, I didn't get into this risk weight and what impact it might have, simply because I think Ritu Singh is going to speak to NBFC chiefs in a minute, and I think that will form a very important part of whether that is impeding inclusion or simply improving inclusion by making it safer. But I leave that to the very able hands of Ritu Singh and her very eminent panel. But I have to end with this last word of caution, sir. This DPDP bill coming in, let me elaborate it, Digital Protection and Data Privacy Bill. Do you think that now we have to, go up from financial literacy, which we have not yet achieved, but we have to go to financial education to tell the lowest common denominator and even the highest common in this case, how and what data they can reveal and cannot reveal? Are we in for a very challenging period? How are you looking at the DPDP bill?
Yes, so I think Mr. Khara did talk about that a little bit. So before coming to DPDP, very quickly on Ratan's point, and you raised a very important point. I think the biggest risk today is the protection of the individual customers, not cyber. This is largely the social engineering kind of activity. And the challenge we see there is, very educated people like you and me also falling prey to such instances. So there are 2-3 basic issues which needs to be solved there, which are a work in progress. One is that, of course, we need to prevent that, and therefore all banks have to have those alert mechanisms in real time. We already have. But more importantly, once the money goes, how do you stop it from going out of the system? And how do you get it back? Today, the need of a physical FIR to actually get the money back is very, very difficult. The money has been defrauded in Mumbai, the account maybe in Punjab, and somebody else, 10 accounts in between. So all the state police, so this is one systemic issue, I think. So we are working with the Ministry of Home Affairs and the I4C on all this, but all states to be on board. So that is one challenge. And the second, of course, is prosecution, that these people need to be caught and put in jail for a long time. And many of them are unfortunately not adults. So we have all heard and seen Jamtara, etc. And believe me, that actually happens. We've seen it happening actually. And we see this more changing all the time from different clusters to another cluster to another cluster, because there's no downside. You try 100 times, one guy gets defrauded, your day is done. And the last piece there, which I think the government has very seriously taken up, is with TRI to actually block SIMs, and also the latest idea is to block IMEI numbers. Because changing the phone would be hard. It's expensive. SIMs are like, though there are a lot of controls being put, still not very effective. So I think that piece is real thing which we need to solve on a systemic level. And coming to the DPDP Act very quickly, I think we did an in-house analysis, and it's still a work in progress. The implications can be simply huge, because in each step of everything we need a customer consent. So we have requested 2 things from the government so far. One is give us much more time, because it's new customers. Perhaps we can build in the next 5-6 months a consent layer and a consent manager, etc. But for the existing 400+ million customers, we need time to actually get their consents for everything. Or allow us an omnibus consent. Even that may take time. So that is one piece. The second piece is that the customers sometimes do not understand how much consent to give, till what time, how do you take it back, or for what purpose. And there are purposes to protect the customers. And so our ask has been that whatever data is asked by government or RBI, and there are things like gender, etc., which we don't need actually in our account opening, but it is needed by the RBI, minority status, etc., all of that. So all those things, we are saying that please put those things, plus those things which we need to protect customers, for example, getting the profile, etc., just so that if they do any transaction which is outside the profile, we stop it or give them an alert. These things should be put under maybe not needed, consent not needed kind of stuff. Because unless we actually do this, it will create a huge problem area, and there will be many people suing us, putting RTI to say that this was not the mandate. And so these clarifications need to come. I'm sure the rules, as they are being framed, the government is also very open to the idea. They said, please tell us what more you need, and we have been telling them. So hopefully it will be addressed.
Thank you very much.
The other side of the coin is also, in my view, it will also become a catalyst for digital adoption. See, today, while of course digital adoption is very high in India, but there is also a sector of people, who are averse to digital, right? And or maybe using it only for certain purposes, not maybe for others. In my view, some of these will also help build that confidence and trust that digital is actually now safe, and it will be only done once I give the consent. So it could also pave the way, if done properly, for the next level of digital growth.
Oh, absolutely. When you read some data, some articles on how your digital footprint can be used and how much you are leaving behind, every time perhaps biometric and selfies are taken without your knowledge, you're in somebody else's selfie, and you don't know how much of that is also getting integrated because of AI and because of the ability to run programs on big data. It really scares you. You're worried whether you can do the next Google Pay. You're that scared. But it's important that technology is also opening the doors for inclusion. The panel has left us with a lot of hope that you're going to see quantum leap in, amount of credit being disbursed and financial inclusion, but also leaves us with a lot of warnings and caution on how data can be misused, both fraud as well as, the likelihood of being sued, something which even fintechs should be worried about and individuals should be worried about. Every time we are asked to check the box on, have you read the terms and conditions? I mean, ever so many times, ever so many of us are guilty of putting that tick without having even opened or gone into that page of terms and conditions. Perhaps we all have to be very
Just try
careful
managing
here.
the cookies that manage
Yes.
cookies.
I
Just
mean,
try doing
either
that.
it is all or restricted, but we have always sticked it because we want to use the data. I agree with you, sir. We are all guilty of it. Thank you very much, Ajay, Ratan, Sandeep, Shalini, and Mr. Tewari for an extremely enlightening chat. Thank you very much.
Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.